Cameron, I'll start with you. As an investor, as a shareholder in this name, you surprised to see a 21.5% move lower?
I am. I worked at the company as well, and we all had a lot of puns there. Things are fantastic. Today's a pentastrophe, I think, if you're a Pinterest investor and shareholder. But the early few quarters, when a company goes public, there's a lot of volatility, and I think you're seeing investors that have come in and out of the stock kind of doing that. But you saw the stock also come off of lockup a few weeks ago and barely moved. So I think most insiders did not sell a lot of shares. I think long-term people are fairly optimistic about this company and the stock.
Anything about the numbers that were reported last night or the move in the stock today that would change your, I guess, investment thesis on the name? Would you be buying more? Are you going to hold, sell?
I mean, I don't know if I can make a recommendation on the stock. That's not my role.
For you personally.
I think it's a great name to hold long term. I think it's if you believe in the story, if you believe in the narrative, that it's a great management team, tight nexus between the user base and e-commerce, and strong international growth and user growth. I think that the business is well poised for the future.
The international is what people have issues with, right?
Yeah.
They want to see a broader spectrum of advertisers. True? Fair? Valid?
I think what people don't understand is international, some companies like Twitter, for example, have a lot of users internationally, but they may be in places like Indonesia that are very hard to monetize. Pinterest users internationally tend to be in Western Europe, the UK, Australia, Canada. These are highly monetizable markets. So I think you're going to see this play out over the next few quarters, but today's a tough day for the stock, no question.
Tom, I kind of don't get it. I mean, if you believed in Pinterest before, what has really changed? I mean, yes, they're figuring out how to get their public company footing, but they have some strong underlying numbers, fundamentals, half the market cap of Twitter. I guess that's why you say it's a buy.
So definitely, I think that yesterday's move or today's move has created a big-time buying opportunity for Pinterest. And really the opportunity is what you're just talking about. It's international. Today, the audience for Pinterest is 70% international, 30% US, but the monetization is only 10% international, 90% US. This is a company that's had 3 quarters as a public company, has done really well. We're encouraged by the improving trends when it comes to international monetization. We understand today's been a tough day for the stock, but we say take advantage of it, which is why we're upgrading.
Tom, what do you think of the fact that spending did rise sharply? Costs and expenses, total costs and expenses were up 94% year on year. Were you surprised by that?
I wasn't surprised, but I look at Pinterest kind of through the lens of Roku. So 2 advertising-based business models that have similar levels of sales today and similar levels of profitability. But because both are advertising-based business models, I'm confident over time they will have much bigger margin and generate a lot of free cash flow over time, which is why I'm comfortable recommending Pinterest despite that short-term increase in expenses.
Cameron, I'll put the same question to you.
Well, it's funny because they increased expenses year on year, as you mentioned, but they also indicated a narrower loss for the year as an estimate between 10 and 30 million, down from 25 to 50. On a scale of over $1 billion in revenue, losing 10 to 30 million dollars this year is pretty light, and it indicates that the company's on a path to profitability fairly easily in the next 12 to 18 months, which is a really different story than a lot of other tech IPOs you've seen in the last few months.
Cameron, it seems to me that maybe Ben Silberman's personality plays into this a bit, in that he's kind of incapable.
We talked about this on IPO day.
Yeah, I mean, he's not a hype guy, right?
No.
So, I mean, the reality of increased spending as they try to expand into international markets, that hits you in the face. The growth number being a little lower than you wanted, it hits you in the face. But he's not going to tell a hyped story around how well they're going to do. Do investors need to factor that in, and what are the real significant tells in Ben Silberman or in the company's numbers that investors should look at if they want to get excited?
Well, I think it's the things we talked about. I mean, the user base is still growing pretty healthily. The overall ad revenue grew 47% year on year. That's a pretty large increase for a company this scale at this point. And I think, hopefully you're going to see that continue over the next year. And I think Ben is a very steady operator. He is not a big hype guy, but he's also not someone that's going to lose the forest for the trees. I think he's the kind of person that builds this company for the future. He mentioned, I think, on the call yesterday that they made some tweaks to the algorithms and made the site more usable. And I think those things tend to have longer-term benefits. But look, it's a tough quarter, and I think the company's going to learn from this and hopefully move forward.
Tom, biggest risk to your buy thesis?
So the big risk has got to be that international monetization doesn't play out as we think it will. The good news, though, is that they've survived GDPR. So as far as regulatory concerns, that's not a concern. They have an incredible visual platform, and they're just in their early days and starting to monetize it. but they've done a good job so far. We think they're going to continue to do a good job over time.